Hello, welcome back to this week's episode of Closed by Mo. My name is Mohammed. I'm hopefully your favorite YouTube host on most things real estate. I'm also a real estate investor and a broker based out of New York City. And in this week's episode, we're going to talk a little bit more about the real estate market in New York City, specifically the commercial real estate market, and to get even more specific, the industrial real estate market in the commercial category of New York City. The reason why I picked the industrial market is because I think it's a very good indicator of what's happening in the world of business and how that's tied into real estate. The reason being, a lot of the industrial space in New York City is leased or owned by e-commerce retailers, people that are selling their products online and they need a place to store it. Even physical retailers like, let's say, Sephora, big grocery stores, companies that you would go into their brick and mortar stores to buy their products. Also, of course, distribution and sub-distribution companies like people that are delivering packages, things like that need a place to store them. It's very important to keep a pulse on things like that because it'll be a good indicator of what's happening in terms of overall activity. Obviously, if activity is increasing, it's a very good sign of business demand and business trends moving into New York City. And vice versa, if activity is decreasing, then it tells you that, okay, from a business perspective, things aren't going super well. Without further ado, let's jump right into this analysis, and hopefully you can learn as much as I did while I was making this video. Before I even jump into the video, I want to clarify all the information that I'll be communicating with you today that you're going to be watching in this video is cited. I'm not just pulling this data out of thin air. You can scroll down to the description below and you can look up the resources that I've been using. Most of the data is coming from CBRE. Now, in a nutshell, if I were to summarize the industrial real estate market in New York City based off of the leasing activity, it's not doing too good, just to be super frank with you. So if you were to look at the actual data, what the numbers are telling us in terms of overall leasing activity, what we're seeing is demand from businesses for leasing these spaces. I'm talking demand from e-commerce providers, to store their products, demand from retailers like makeup brands, Sephora, groceries, whatever it is, any business that's in the retail industry that relies on a brick and mortar store. Their demand for industrial space for storage and distribution has also gone down quite significantly, and I'll jump into the numbers in a little bit here. Demand from warehousing, distribution, sub-distribution, all these types of companies that rely on the warehouses or industrial space for logistics has also decreased. Now, to give you a bit of a perspective here, obviously most of the Northeast saw a little bit of a decline. However, in New York City it was a lot more acute because my opinion is that we're seeing, this is obviously more of a business hub. So as businesses pull back, New York City's industrial market demand for the industrial market leasing sector is obviously going to pull back a little bit more than the rest of the Northeast. Now, what I will say though is overall vacancy actually remained pretty stable at right around 5%, I believe. But it wasn't due to an increase in overall leasing activity. It was due to a decrease in demand, but that was also coupled with a decrease in overall new units that were completed or new amount of square footage for the industrial sector that was also completed. I'm going to post the screenshots here so you guys can take a look at exactly what I mean, but you'll see that there's a very big jump down in terms of overall new units or overall new square footage in the industrial space that had come live in New York City or projects that were completed. So that's why you can see that the overall vacancy rate remained stable, which I don't think is a good indicator unless you actually look into the details that, hey, demand dropped because supply also dropped too, or, not saying these are correlated, but if the demand drops and the supply drops, it means overall trend is down, but the vacancy rate will still remain stable because both those factors went down. Just to give you a sort of a broad idea about how much the industrial leasing side or the demand for industrial space has fallen, if you were to look at the data from the last couple of years, you would see that in Q4 2023, the overall demand or the amount of the new square footage signed or the leasing velocity was more than 70% lower than the quarterly average over the last couple of years. And it was even if you don't want to look back the last couple of years, even if you were to look back quarter over quarter, you'd see the demand in Q4 2023 dropped by more than 50% from Q3 2023. Now, what that's an indicative of is usually that the demand side has fallen quite a bit, meaning new businesses or current businesses aren't really looking to expand their space or even maybe have a fall in overall confidence in terms of what their business outlook is going to look like. Now, my personal opinion is this probably has a lot to do with interest rates and the federal market signaling that maybe they might keep the interest rates as is before they reduce it. But obviously, the report also cites that as consumer or business confidence returns in 2024 outlook and beyond, we should start to see a bunch of new signings coming on. Now, to give you a perspective on what the overall industrial employment market looks like, just so you have an idea of how businesses are operating, because if they're not demanding new spaces and they're planning on cutting back or consolidating, then you should also start to see employment numbers fall, which is exactly what we're seeing. So you'll see in New York City in the industrial sector, there was an overall quarter over quarter loss of around 7,500 jobs or 7,500 positions. That's 7,500 people that just lost their job because businesses aren't doing super great. Now, in conclusion, what you might take away from this video is that overall the demand for industrial space in New York City has definitely fallen. I personally think it depends, submarket to submarket. Obviously, if you are closer to a transportation hub, like let's say JFK's, logistics airport or runways, the demand for industrial spaces or storage spaces there is still pretty high in my experience, what I've seen. A couple of other things to also keep in mind, just so you have an idea too. Queens definitely still has the highest per square footage in terms of price. When it comes to industrial leasing, hovering right around $30 or so, followed by some of the other lesser known boroughs, with Bronx being the cheapest borough for overall industrial space leasing. Now, I want to reiterate here, the square footage pricing coupled with the vacancy rate might tell you that, okay, well, things seem to be pretty stable, but you have to understand that, vacancy and demand and things like that, they're tied together with supply. So if you have demand drop along with supply dropping at the same time, the vacancy rate would probably look the same, which it actually does year over year. But someone that might not really look into it too in detail might look at that and say, okay, well, the market's pretty stable. That's not the case. So I'll post the screenshots here so you can see how big of a jump down the overall new units or new square footage is in the industrial spacing or in the industrial space leasing in New York City. And you can see that it's more than a factor of one. Now, I hope you guys enjoyed this video because I definitely had a lot of fun making it, and I definitely learned quite a little bit too in terms of doing more research about the industrial side of things in New York City. I hope to make more videos from a commercial real estate perspective in New York City, because it is definitely an industry that I'm not only trying to break into, but I'm also trying to learn more about. I'll catch you guys next week. Bye-bye now.